the vast majority of the trades were executed in Eurodollar, where the spread is very tight. Unfortunately, that doesn't seem to make much of a difference to the outcome. 62% of all the trades by the broker's clients ended in a profit. That is a little more than 6 out of 10 trades. That's a good hit rate. A trader with a hit rate of 6 out of 10 should be able to make money from trading. Of course, it does depend greatly on how much he wins when he wins, and how much he loses when he loses. Therein lies the problem for the 25,000 people. They were very successful in terms of hit rate, yet when you look at how much they made on average per trade, and how much they lost on average per trade, you soon realize that they had a major problem. When they won, they made about 43 pips. When they lost about 78 pips. There's nothing wrong with having a system where you lose more on your losing trades than you win on your winning trades. However, it does require that you have a sufficiently high hit rate in order to absorb the losing trades. A colleague of mine, a professional trader from South Africa who trades at a hedge fund, has a hit rate of about 25%. I tell his story in greater detail later in the book, but let me explain the term hit rate in the context of his hedge fund. When his hedge fund loses on a trade, they lose 1x. When they win as high as 25x. It stands to reason that my friend is immensely profitable, even though he doesn't have a convincing hit rate, at least not from a traditional perspective. What I find particularly interesting is how much bad advice there is in the trading industry. You will often hear traders talk about risk-to-reward ratio, which in itself is fairly innocent, unless the trader takes it literally and applies it on a trade-by-trade basis. When I call out trades in my live Trader Tom Telegram group, I will always announce a stop loss. Always. However, I often get asked if I have a target in mind. The answer is quite often a little sarcastic. No, my crystal ball is out for repairs. Or if I'm particularly grumpy and tired, I will be rude and say, "Sorry, amigo, but do I look like a fortune teller to you?" Yes, I know, that isn't very polite. I'm sorry. Ignoring my blatant inability to be polite when I am faced with the same question for the 450th time, there is a deeper meaning to me not calling targets on my trades. It has a lot to do with risk versus reward. Risk versus reward. I personally find the whole risk-to-reward concept enormously flawed, but since I am the only one who ever talks about it, I accept that I am probably wrong. Still, hear me out. How on earth do I know what my reward will be? I literally do not know. Even if I pretended to know, say, by using a measured move calculation or a Fibonacci extension, I know myself well enough to know that I will have added to my trade along the way. When it got to my target, I would not close it because that is my philosophy. I would kick myself if I closed a trade at my target, and then it went even further. I would rather give away some of my open profits than miss out on potentially even more profits. Now I am probably making a big fuss out of nothing, but targets are not for me. I want to see what the market will give me. I am prepared to accept that this may mean I will give away some of my open profits. I have lost count of the number of times I have had a 100-point winner in the Dow, which then turned into a 0. A week before writing this, all documented of course, I had one such winner, which turned into a big, fat 0. Some less than happy traders confronted me in my live trading room as to why I had not taken my profits. It is difficult to explain, but it is all to do with pain. It gives me much less pain to kiss a 100-point winner goodbye than it does to take my 100 points, only to see the market moving even more in my favor. It is because of this philosophy that I am at times able to make 400 to 500-point gains, as I did today. It is one or the other. I don't think you can have the best of both worlds. Interview with CNN. In an interview with CNN some years ago, I was asked about the traits of winning traders. In this very candid interview, I highlighted a few points that I felt differentiated the winning traders from the losing traders. It was based upon my experiences from observing millions of trades by retail traders while I was on the brokerage trading